Hi everybody, and welcome to the Middle Class Investor. Thanks for coming in this week. This is for week ending May 2nd, 2014. And as you can see here, we had an up week on the market. Each one of these is a week. And this is after coming back to a higher low. We had a bounce, and the market's been pretty strong. The reason I look at the S&P 500 all the time, by the way, is it's a very liquid market. Some of the largest companies that represent the U.S. economy are in this market, so that's why we look at it. But it is important sometimes to compare the other indexes as we're trying to evaluate the market. So the first one I want to look at is the Dow Jones, because what you can see here is the S&P had an up week. But if you go to the Dow Jones, let it pull up here, it also had an up week, but didn't quite make that new high, which I thought was interesting. Usually when it gets that close, you usually end up making a new high. On the NASDAQ, also had an up week. So, but let's switch real quick to the dailies. Because this reveals some information too. So let's go back to the S&P 500. The S&P 500, let's zoom in just a little bit here. You can see here that the S&P 500 had a down day, about 2.5 points. But it didn't, this is the high, this is the most recent high day, and we didn't close below this high day. So if you look at these bars, these candles, the market moved and it made a high on this day, on May 1st. And then the next day, May 2nd, it made a newer high and then closed above this low. So a lot of times when you get this is some pushing and pulling between the bears and the bulls at the end of a short-term trend. So what we're going to look for is a day that closes below this new high. Now we have this new high here. And then what we can say about that then is that we have a lower high compared to this high. Okay, so we have a high here, and then if the market stops going up right here and we get a close below this day, the low of this day, then what you can say is that the market now has made a lower high. And then what we need to look for it to do is either come down to this low here, or either just below it or right around in this area and bounce, or if it goes through this area, we want to see how it moves through this area. We want to see how it approaches this blue box down here. So real quick, let's look at let's go to the Dow. The Dow, you can see, is different. There's a high here, back here on the 4th of April. The market ran up really strong, pulled back, made another run up, and now you see that we've closed below this bar. Now, this doesn't mean anything yet, especially since it made a new high, just like the S&P 500. But it is interesting that this market appears to be weaker at this juncture than the S&P 500. And then of course the NASDAQ has been weaker just all the way across the board. So the NASDAQ had this little prolonged downtrend here. It bounced. It made a lower, if you go back to this low here, it actually made a lower low. Only slightly though, only a slightly lower low, but lower low nonetheless. So, you know, the NASDAQ is making lower highs and lower lows, lower highs and lower lows. And even on the larger time frame, if we go to a 5-year, the NASDAQ here has it's made a lower low, and depending on what it does here, if it comes up and turns back over, then now that's also a lower high. And so what we want to do is we're just trying to determine the nature of the trend. Is it changing? Is it Is it just bouncing? And that's all. That all has to do with how the market behaves at these critical areas, like this low here, this low here. So we're going to continue to look at that and follow the market action at those critical points. Let's also, while we're here on the 1-year chart, let's look at the 10-year Treasury. Let's look at that on a weekly chart real quick. So what we've been looking for to happen is to come back into this box. So let me pull out a second. If you go back and you analyze this downtrend, it's been going on for quite a while, and it looks like it's trying to bottom here. And we've had a significant move off this bottom. I mean, if you measure this, this is a pretty significant move for interest rates. That is roughly 16%. That's pretty significant for interest rates. So what we look for is this initial move off the bottom, a pullback to a higher low, or to a support area. And support in this case is this blue box here, around 2.5% interest rates on the 10-year. And it looks like that's shaping up just fine. I mean, the 10-year is pulling back. We had this consolidation pattern here. It kind of popped out to the upside and then dropped. And we're going to look for this to pull all the way back into this little blue box. Now, it'll likely pause there, and then it'll either bounce and go higher, or it may move through this box and go lower. So we're going to watch it. We're going to watch the 10-year Treasury very closely at this area. This is one of the critical areas we need to be focused on. So let's now look at the 10-year on a daily. So you can see here that you see the same thing. You see this consolidation pattern and then this breakdown. And I think it'll move pretty sharply into this box. So we should know something this week about where the 10-year, I say maybe in the next week or two, we'll see this 10-year pull back into this area, maybe chop around a little bit, and then back to the upside. Or if it just slices through this box, then we need to reevaluate kind of what's going on. But let's go back to the S&P 500 and look at it on the daily. And you can just see here, this was a pretty hard, I mean, look at how many, one of the things you want to look for in the market, and I haven't talked about this before, well, we actually talked about it before with respect to this downtrend. There's a saying that the market goes up, it takes the stairs up, and it takes the elevator down. And kind of what it means by that is how fast it goes down. So you can just visually, you can just see that there are fewer bars. There were fewer months to go down than there were months in going up. And this is pretty typical of the market. And it's even true for your shorter term trends, your dailies. So you can see here the market, it dropped pretty precipitously. Here it dropped pretty precipitously. So we want to see, what we're looking for is how does the market go down, and then how does it go up. And you can see here this down move only took, it took 7 days. And that's not a lot of time, really. The up move thus far has taken 21 days. So this is pretty typical. So if the market's taking a long time to go up but a short time to come down, this could be a sign of a potential trend change. And it's just something to be aware of. It doesn't mean that it has to go down, doesn't mean it has to go down tomorrow or anything like that. It's just something we want to keep our eye on. It's just another piece of evidence. So what we're doing here is we're looking for clues and evidence that leads us to a confidence level for making a decision. We talked about last week that right here in the middle, there's no decision to make. Okay, if you're in, you stay in, and if you're out, you probably wait for a pullback to some support area. Excuse me. And then, of course, we've talked at length about this rising wedge and the probability of how the rising wedge resolves itself. And so, we just this is the weight of the evidence. It's just like a case against a criminal. There's either circumstantial evidence in which you might not act on, but if the weight of the evidence is pretty heavy, then when you see what you're looking for, when you see lower highs and lower lows, then you can say, okay, the weight of the evidence is high, the probability for trend change is high, I'm going to take action if we get to here or whatever, some place on here. So just keep that in mind, that right now the key levels in my mind are on the high side, this high right here. So I know it doesn't mean much to say that if it breaks 1899 that we're probably going higher. But you can see here from the chart we're not going much higher. Let's zoom in a little bit on that so that y'all can see what I'm talking about. So here's your 1899 level. If we go higher, we're only talking about maybe, oops, the wrong thing here. Maybe only to this area right here, which is 1925. Which is not, it's not a bad move. But on the low side, this low here is key. Or we could look at this box, this box that we have drawn here. This is also key. So if we get a pullback that comes through this box, of course it would come through over here. So if you got a pullback that, I don't know, look, sometimes you get a little bitty move like this, and then you get a big move like that. So if it were to pull down through this box, pretty hard, that might be something that we want to take into consideration around the weight of evidence. So just keep that in mind. There's nothing to do to take action right now. We're simply waiting. And in fact, if you have a 401k or an IRA that you're trying to keep from, you're trying to grow over time and keep from losing money in these rapid sell-offs, you shouldn't be taking a whole lot of action. You should be, you might do something like balance if it's allocated to a bunch of different asset classes. You might balance, in June and then again in January, stuff like that. But you really shouldn't be doing a whole lot in those instruments because they're mostly long-term investor instruments. In other words, they're not trading vehicles. In fact, there's a number of restrictions on being in and out of those instruments in a 30-day period, for example. And you should be aware of that. If you take action and you're wrong, and it's 30 days before you can get back in, or let's say you took action to get in and it's 30 days before you get back out and the market loses a bunch of value. These are types of things you need to know about your particular IRA, 401k, things like that. It should just be a phone call to the management company or to the mutual fund company, or somebody knows, and you probably, if it's 401k, you've probably been given a written policy from your administrator. Anyway, that's really all we have today. I think this week is going to be I think this week will reveal a little bit more. Until we get out of this wedge one way or the other, there's not going to be a whole lot of information revealed about the market. And again, I say, excuse me, if you've been in then you should just be staying in. There's nothing to do. If you're on the sidelines, there's potentially nothing to do. You could consider a pullback. My personal feeling is if we pull back out of this wedge pattern, even if we stop here at support, the likely thing is that this wedge pattern is going to hold up. So if we pull down through this lower trend line, and let's say we hit support, we might get a little bounce up into the bottom side of this trend line, and then back down. Now I can't really say the same thing on the upside. I mean, I think it's very, very, very unlikely that this actually continues up and breaks out through this trend. I mean, this pattern is so well known and so many people are looking at it. It would just be very unusual for it to be able to break out to new highs up here above this trend line. It's not impossible. I'm not saying it can't happen. It's just it would be the low probability action that you would take. Just like we don't typically trade against the trend. I mean, you wouldn't want to be short the market in this area. It's the same thing. These patterns mean something, and they do resolve themselves with a high degree of probability. I think we covered this probability one time. I think it was like 91%. If you wait for the breakout, it's like 91% or something. So that's a pretty high probability. It's almost something you can just about count on. So don't take it lightly if that happens. In fact, that's an area we want to take action. If we come down through here, you could take action immediately on that particular day that we come through, or you could wait till we get to support and get back up under the underside of this lower trend line. Either way is an acceptable way to take action on this type of market movement. So anyway, that's it for this week. If the market starts moving quite a bit more, I'll go ahead and make a midweek video. It's just in the last several weeks or so, it's just been in kind of a sideways pattern. There's really not a whole lot to say about it. But for those of you that are listening out there, forward the YouTube channel to your friends, to your family. We want to hang on to what we've been able to save, and I think if you've got friends and family members out there that are concerned about that, the problem is they don't really know what to do, right? So we should help them and get the message out there, help them make a decision. The toughest thing to do is to make a decision when you need to make a decision. Most people kind of get frozen with fear because they don't know. Should I do this? Should I do that? I don't know. And then as a result, nothing happens and they just continue to lose. And then about the time they decide to take an action they can't take any more, that's when the market bounces and goes the other direction. So it's a very, the thing that you don't want to do is what you have to make yourself do when you don't want to do it. And then it's just the opposite on the other side. So that's the paradox, or the difficulty of trading is the psychology of it is it really works on you. So understanding that will help you make a decision when it's time to make a decision. So until next time, thank you for coming to the Middle Class Investor. Follow me on Twitter at InvestorClass, or you can find the YouTube channel at the address of Middle Class Investor. Now, if you would like the videos, subscribe to the channel, share it with your friends and family. We're just putting it out there. That's all we're doing, is just putting the information out there to try to help people. So if you could help do that, I would really appreciate it. Until next time, thanks for visiting the Middle Class Investor. See you.